Welcome. In this video we're going to talk about what is an if done order. Stay tuned. Hey traders, a very warm welcome to you. So what is an if done order and how can we use it in our trading? How do we structure it, and then how do we actually put those tickets through on a trading platform? Let's dig into it and dive into it right now. So let's do an example. I've got a FTSE 100 chart up here. It's a daily chart. So each candle is representing 1 day's worth of trade. And for argument's sake, I have looked at this and I've thought, oh, I would like to buy this market if we come back down to 7,200. So I'm kind of jotting this down on my chart here, and I could be doing this actually either in the platform or I could be doing it on a separate chart, whatever it may be. Anyway, the point is I'm saying to myself, hey, I want to buy this at 7,200. All right, now if I buy at 7,200, where would my profit target be? Oh, you know what, I think we could push back up to this kind of resistance level here at 7,000. Let's front run it a little bit and go to 7,400, and let's color that green so I know that's my profit target level or my limit level. And you know what, I just want to use a 50-point stop. I think that would be a good level for me to come out if I was wrong on that trade. So let's cap that, let's put it on red so we know we are. So this is the trade that we're trying to express here in this example. We are basically saying, okay, if the market comes back down, if the FTSE comes back down to this 7,200 level, we want to go long down here for whatever size we're doing. Let's say in this example we're doing £5 a point and we're spread betting. We could be doing CFD, we could be doing futures, whatever it may be, doesn't really matter. The point is we just need a size and a price. So the price is going to be 7,200, the size is going to be 5. Right, great. Now we need to know how we're going to bracket that trade, and we need to say to ourselves, okay, that's our profit target here. If it goes up to the 7,400 level, we want to take profit. If it comes down to the 7,150 level, we want to stop out of the trade and take a 50-point loss. So what we're doing here is we're creating a trade idea that we're bracketing to the high side and to the low side. It's a long trade idea. We need to be putting in an if done order. So an if done order is basically saying if something is filled, then execute these orders. Now they may not be market orders, but there'll be orders that are put live. So there might be limits, there might be stops, there could also be markets as well, but it's like a nested if statement, so logic to it. So if done, then do something else. And in this case we're going to say if this long limit here is filled at 7,200, in other words, if the FTSE comes down to 7,200, fills us, we go long, then please put in a limit sell for £5 a point at 7,400, which will take our profit, and please put in a limit stop loss. Please put in a stop loss at 7,150 to sell our position size with £5 a point, losing us 50 ticks. So if this is filled, the primary order is filled, then put these secondary orders in. So this basically allows us to analyze the market conditions and decide where we want to go long or short, and then place a bracket to cap our risk and to take profits after that order is filled. So it's really great flexible way of trading, because we don't have to worry about when this is getting filled. You know, if we're going away, if we're working, whatever it may be, we're not on the screen, we don't have to worry that if this is filled, you know, it could rush straight through and we're long and we've got unlimited risk on it. We know that if that's filled, there's going to be a stop put in on the if done order. We also know as well, if we're filled and it happens to bounce up to that 7,400 level, we're going to take profit. So it allows us to trade without being at the screen all the time. Tell you what, let's dart over to the InterTrader platform and let's have a look at exactly how we would put that in to the platform. So I know it's in the popular market section on InterTrader. You guys can just about see the screen now. I'm trying to squash it in. Let's move this over here. There we go. Okay, so I'm looking at my FTSE 100 daily, and let's say, okay, I'm going to click the order button. Up comes my order, and I want to say we've already decided we're going to do £5 a point. I'm in the spread betting platform here, could be in the CFD. Already decided we're going to go long, haven't we? We're going to go long, £5 a point. Remind myself where we're taking the trade, 7,200. Okay, so we have a buy. It's an order to open. As it's going to be a limit, so we're going to put 7,200 in. That's our buy level. We've got our quantity correct on our buy side, correct. Okay, now here come our contingent orders. That's another word for if done. In other words, Once this order is filled, then these two orders become live. Right, going back to remind ourselves for analysis what we're going to do, we're going to have a stop loss at 7,150 and a target of 7,400. So our stop loss is going to be 50 points away, and we're double checking 7,150 correct, and our target is going to be 7,400 minus 7,200, 200 points away. The great thing about this ticket is it shows us what's going on. It shows not only in points or pips, whatever we're trading, forex, or whether we're trading indices or whatever we're trading, so we can kind of see exactly, you know, maybe we want a fixed point level as opposed to an actual level on the chart. Fine, we can do that. But also we can see as we're moving this counter up and down, it's moving the estimated level that we're going to exit. So it's showing us approximately on the chart where it's going to be. 7,400 is where we wanted it. Great. Is that right? So I double check my order. I say, okay, it's a long, so it's going to be a green on the buy side. I've got my buy selected, quantity £5 a point. Great. The level I want to go in at is 7,200. That's my limit. If those are filled, can you put these contingent orders in? My stop at 7,150, 50 points away, risking 250 quid. Happy with that. My limit 200 points away to the high side, 7,400, give me a £1,000 profit. The extra things we've got on here are good till cancel, good for day and date time. So this limit we can either have just for the day if we do want a day trade and we think, you know what, we only want to go long if that happens today. If it doesn't, then cancel everything. Or we want to say good till cancelled, which basically says, hey, you know what, leave this limit in for as long as possible until I actually manually cancel it. So it might not get filled tomorrow, next week, next month. It'll still be there, even if it gets filled 2 or 3 months down the road. You've got no kind of time frame when it must be filled. And then a date time is when you can structure it to suit whether you want to put the week or the month or whatever it may be. So that depends on obviously your objectives, your day trading, and it's just surely something you want to do today. Then you can put that good for day order, and you know that at the end of the day it's wiped out. You're not going to get filled the next day. So we put that in, we double check it, we hit our buy, we double check we're on the green, and we hit submit. Off we go, double check everything we've got our levels done, and that then goes into our pending orders area because it's not filled yet, and it'll only be filled if the price comes down to hit our 7,400 level. Let's stretch this out so we can see. It'll only be 7,200 level. We would go long. There will be our target. There will be our stop. Good. Nice way to structure a trade. Worth doing. It's the sort of thing that you can kind of analyze several markets, put your orders in, and know your max risk on each trade, know your kind of profit areas for each trade, and be much more, have a better framework around what you're doing. So good little tool, handy to look at. That's the if done order. Hope you enjoyed the video, guys. Take care. See you soon. Good trading. Bye bye.